Well, the meeting minutes show that there was some optimism among Fed officials that the economy might have been reaching a turning point when they met in mid-June. The vast majority of participants assessed that growth in economic activity appeared to be gradually cooling, the minutes say. But policymakers were divided over the effect on policy and growth. Some noted there was uncertainty about the degree of restrictiveness, with most participants viewing current rates as restrictive, while some thought they might be less so because the economy's strength showed the longer-run equilibrium interest rate was higher than previously assessed. The division meant more uncertainty about the economic outlook and how long it would be appropriate to maintain rates at their current levels. Some participants emphasized the need for patience in letting policy work, while several noted that if inflation were to persist or increase, the target range for the federal funds rate might need to be raised. A number, however, suggested policies should stand ready to respond to unexpected economic weakness, with several emphasizing that further weakening in demand might lead to higher unemployment ahead. The uncertainty led to their assessment, expressed in the statement, that they needed more time to see more data on inflation and employment before they could make a decision on rate cuts. Overall, quote, a number of developments in the product and labor markets supported their judgment that price pressures were diminishing, the minutes say, and they expected that to continue. The minutes, however, contain almost no mention of the May CPI figures released the morning of the Fed meeting, which showed a drop in price pressures. Only that the May CPI reading provided additional evidence, the minutes say. There is no mention of whether anyone changed their forecast because of it. So now the focus shifts to next week when Chairman Jay Powell goes up to Capitol Hill for his semi-annual monetary policy testimony.